We're now live on YouTube, Chair.
All right, thank you, Ellie. Right, okay, so back in public session, on to item 8, which is the Treasury Management Annual Report, and it's back over to you, Sue.
Thank you, Chair. I will be handing over to Suzanne, who will take you through the paper, but just for summary purposes, this is our annual report that will be going to Council on the 15th of July. Obviously, it comes to Audit and Accounts Committee, one for update, obviously, but any comments. We have noted that there are a couple of formatting errors in the report, which will be picked up before it actually goes to Council. So I'm going to hand over to Suzanne, who will take you through the report.
Thanks very much, Sue. I won't repeat some of what's just been said. Obviously, Treasury management activity is led by the Section 151 officer in line with the Treasury management strategy, which gets approved by Council in February of each year. As Sue said, this is our annual report for last financial year, which, as I think everyone's well aware, was a challenging one for investments, but I'm pleased to report that our Treasury management still delivered as an income of 2.08 million against a budget of 2.56 million, which equated to a return on investment of 1.63% against our initial estimate of 1.98%. Obviously, we manage our investments as an overall portfolio, so rather than have individual targets for each component, we expect a level of income in return. You'll see that 63% or approximately of our investments are long-term strategic investments, and 37% being more liquid type of cash, which we held at a higher level than normal over the last year because of the issues with cash flow related to the pandemic. And obviously our need in that respect is diminishing, as it is for a lot of other local authorities. So again, there's probably quite a lot of local authority cash looking for places in the market, along with ourselves. Table 1 sets out against the classes, our classes of investments that were held at the start of the year. Some of those have been covered by the presentation previously, and you'll see from that that we were clearly rolling our liquid cash quite a lot during the course of the year, principally using the Debt Management Office, which is part of government. So not an awful lot more safe place to put our money than that. Table 2 on page 59 showed how each class of investment performed over the year and how that gave rise to the 1.63 return. And table 3 on page 61 sets out the valuations of our external funds as they sat at the 31st of March 2021. So not only have we made a return on investment, we've also got capital assets that have marginally increased in overall value. So some capital appreciation there as well. Sue Curden, as the Section 151 officer, has powers delegated to her with regard to the amount of money that was invested in money market funds, which was increased during the course of last year. And I can confirm that along with that limit and all others, everything that was in the Treasury management strategy with regard to our agreed limits were all adhered to during the course of the last financial year. On page 64 in table 4, we've set out the cash returns for each of the class of the investments, which again, it is in that climate of very low interest rates, which we're still expecting to continue for the foreseeable future, and which we will clearly take into account in the medium-term financial strategy that clearly we are developing at the current time. So in addition to the cash and the returns, this report also sets out our Treasury management risk indicators, which are all showing very favourably at this particular for this particular year. And our prudential indicators on page 66 which should be in the table headed table 6 rather than 5. Again, we will correct that. Are showing a positive situation for us. We have a statutory requirement to set these, again, part of our annual capital strategy process, and to monitor against them. So those are the key headlines from last year. Overall, I think it's a very positive situation. So on behalf of Sue as a 151 officer, I commend this report to the committee for consideration and noting before it goes on to council in the middle of July.
Thank you, Suzanne. Yes, if we go back 6 or 9 months, I think we were all extremely concerned. So it's good to see that the outturn has been somewhat better than maybe expected. Yeah, we'll open it up. Councillor McCormick, your hand was up first.
Sorry, Chair, is it possible for me just to add a couple of comments before members come in?
Okay.
Sorry, apologies. I don't know whether you can see my hand. I'm waving it, but
Oh, no.
sorry, apologies. So I think just to add to Suzanne's commentary, I think one of the things that obviously the previous committee were extremely concerned about was the capital value of the CCLA and the return on that investment. One of the things that you will note in the report is actually the CCLA in terms of income return actually outdid itself in terms of what we expected at the beginning of the year. And actually was one of the highest performers at nearly at 3.9%, which is a significant income return during the year. And I think it's also worth noting that that one was a particular concern to the committee previously, has had an increase in its capital value constantly for the last 9 months, and is now at month 2 in the new year, actually at its position following the purchase of the unit. So it's actually recovered quite significantly over the year and in the last couple of months. So I think from my point of view as 151 officer, I'm content that the investments that we've made are doing well. Obviously, we've heard from Arlene Close in terms of the fund performance nationally or the overall performance of the fund. But from our point of view as part of Basingstoke, I'm content that we have those options. What I thought might come up in terms of the presentation from Arlene Close was that in their papers, which is not confidential, they are suggesting that perhaps we would like to look to actually invest some of our short-term cash further into some of these funds, which we will look at over the coming months. And certainly we will be discussing with our new portfolio holder, Councillor Isaac, what options that we're looking at as officers. But just to remind the committee, I know Suzanne's already mentioned it, the strategy is set by council, but for new committee members, it's delegated to me to actually decide on where we actually invest the funds during the year, as long as they're within the limits.
Thank you, Sue. Are you okay? We now open it up for comments and questions, yeah? Councillor McCormick, Andy, you were first.
Thank you, Chair. Just to confirm the chart 1, I'm looking at the paper version of the papers, and it doesn't have any values or any, just says sell range, value, £1 million and percentage in square brackets. I presume that we could work it out from elsewhere in the report what those relative values were. But I was just wondering if somebody could enlighten me, save me having to rely on my maths to do that.
So apologies, Councillor McCormick, that was part of my introduction to say there are a couple of formatting errors that we noticed when it was printed.
Yeah.
So we can circulate that with the correct information in it, but it links to the overall holdings that we have,
which are in table 1. So apologies, it just didn't pick it up in the formatting. So we will be correcting that for the version going forward to council.
Right. And then chart 2, I had another question on chart 2, which was it appears that although the 5-year gilt and the 10-year gilt, the trends seem to broadly correlate. The actual rates vary quite widely, and the 5-year one has dipped below 0% for quite a lot of the year. I'm just wondering what the impact was, what the explanation was for that. The 12-month rate seems to be doing a lot better, and again, it seems to be broadly tracking it, but it's started off well at the beginning of 2020, and then I guess it's been a victim of the pandemic because it went down towards 0 at the beginning of the year, and it's slowly coming back up again.
Yes, that's correct. It has been obviously impacted by national issues. It's not just the pandemic. Obviously, it was impacted by the exit from the European Union as well. So there was a whole variety of different things that impacted on those during the year. But obviously, our performance in terms of what we've actually got have stayed relatively stable over that period. And I think actually we've now come out of most of, I don't think we've got any gilts now anyway. I think we've actually, all of ours have matured. So whilst that is for information only, it didn't actually impact on our return.
No further questions, thanks.
Thank you. Any other comments or questions from councillors?
Chairman.
Councillor Putty.
Thank you, Chairman. On table 3, can you give me an explanation on the CCLA Local Authority Property Fund, which has got at the end the valuation change 2021 is a what's called unrealized gain, is it?
No, so it's got an unrealised loss.
Loss.
It's a loss. So yes. Obviously we will send around the information we previously circulated on CCLA, but because of the fact that we only purchased it at the end of 2019, immediately that you purchase the units, there is effectively a drop in the value that then recovers itself over a period of time, which is why we hold the fund for at least 5 years. So, but obviously it was impacted marginally at the end of March 2020. It has recovered that drop by the end of March 2021, and by the time you get to our second month in this current financial year, it's starting to actually recover the initial purchase element as well. So when we have with all these the capital value on any of these investments, they don't take the profit or loss or the gain or loss each year to the revenue account. Effectively, it's unrealized until we actually dispose of the investment. So it doesn't have an annual impact, which is why we look at it as an overall capital value of all the investments. So currently what that table is showing is that we are, having invested £80 million, we have a net overall gain that is unrealized until we actually potentially sell the investment. So the value on that table is 80.89 million rather than the 80 originally invested. But obviously, as already explained, these are held for their income return. And obviously, whilst we hope to get some capital appreciation, it's about supporting the bottom line of the revenue position of the council.
Thank you.
Okay. Have we reviewed and commented on that sufficiently? Yeah. Oh, Councillor Gaskell.
Sorry, it's just following on from Dan's question. It's just a CCLA. I'm a bit confused at that figure of minus 0.06 million. When you look at the figures on the paper, pink papers, it's a positive figure. I don't want to mention the figure in case I'm not supposed to, but it's a positive figure. So is that telling me the figures that the company are coming up with, do they not include charges or something?
So the information that was provided in the previous paper are the fund performance. So overall, the fund performance, this is about the point that this is affected by the point in which we entered the fund. So obviously we've only been in the fund for a year and a half. So we're still recovering our capital value from our original investment. So what that's effectively saying is that at that point in time, we hadn't quite recovered our original investment figure minus our charges, if you like, our fees for actually entering into the fund.
Okay, so the figures in the pink papers, do they include charges?
I wouldn't have thought so. They're just how the overall fund is actually performing.
So do
That's
we?
not, sorry, that's not Basingstoke's performance. That is the performance of the fund in its entirety.
Right. Okay. Right.
Yeah, we bought into it a year ago, but we were given 5-year performances, so it's a very different situation.
Yeah, it's just looking at these funds, and I guess it's the same for every fund you look at. You get these figures, and it shows all these positive numbers, but you don't take into account the fund management costs. And obviously, we've got a manager here who's come and gave us this presentation, but we've got the funds, so they've got management fees as well. And I'm not sure if those are included.
No. So in table 3, that's just the actual fund itself and the original purchase costs, if you like.
Right.
And not all of them would have necessarily a huge purchase cost. In terms of the overall performance, we have a separate fund manager's cost, which I think, if I find it, no, it's not in table 4. I thought it might be in table 4, but we actually have a separate management fee for, regardless of which funds we're in, for obviously our treasury management advisors. This is about the actual performance of the income that comes in. So we have a separate expenditure budget, which is purely just to pay for our treasury management advice. This is actually the cost and return on the actual investments that we made compared to the income budget that we need to generate from our investment returns.
Okay. Yeah, it's just I wouldn't know if we were sort of told to pick a different fund, for example, you need to include those costs basically.
And we would, in terms of the fund,
Yeah.
obviously we have treasury management advice, and obviously as officers we review that every single month, and then I make a decision as 151 officer which ones we're going into. But part of our consideration is the overall capital value, how long we think it will take to recover the capital value, and what the income return is in the meantime. So we don't take into account in that aspect the treasury management advice, because we could pay for treasury management advice and never actually choose to make any investments. That is if you like, a corporate management overhead cost. Whereas what we look at in terms of these funds is the actual cost of entering into those funds and how long it will take us to recover that, plus our income returns.
Okay, thank you.
Okay, thanks all. If everyone's happy, we'll conclude that item 8 and move on to item 9. Okay, now item 9 is simply a summary that we asked for some time ago, just to make all the figures that appear elsewhere easier to read and get a total view. Which is, do you want to say anything about that, Sue?
So I think I would only say at this point, as we're only the second, basically this is at the end of May, there isn't an awful lot to report in terms of what we think the forecast is going to be for the year. And for those members who are new to the committee, as the chair has mentioned, there'll be points in the year when you have all of these items in front of you on the same agenda, and this was meant to help you understand the various different elements that we currently monitor, and why they're in separate reports. So, for example, the property investment strategy is a separate it's a separate fund to the treasury management information, and we had an investor grow fund for the Eli Lilly purchase, and separately many down in commercial rents. So individual members had views and interests in different items. So just to make it easier, they were all extracted so you could see how they're performing, because you otherwise won't see it unless you're looking at the overall budget monitoring report, which goes to Cabinet and Council. So effectively what this is saying at this time is that we are still expecting there to be reduced income over the year as a result of the first few months of the year still being heavily impacted by COVID. obviously the interest rates, etc., particularly on treasury management. We are expecting an increase in treasury management because of other investments coming online. So we will have, for example, a full year impact now of the Eli Lilly building. The fact that is showing that we're expecting to have additional treasury management returns is we're expecting some of our returns to be better, and we've got an increase in the number of returns that we're going to receive. In terms of the commercial rents, we make an assumption that we will collect all of our rents over the year, but we are expecting to have increase in voids over the year, particularly in retail. So that really is just kind of a summary position. You will get proper monitoring reports on each of these items as they come throughout the year in the work programme for the committee. What we then added last time was we were requested to add the age debt for property, because what tends to happen is obviously we record the income that is expected from our property rents, but that doesn't necessarily mean that we have collected that rent. So it's important to also keep you abreast of where our arrears are. And you may or may not be aware that the government have extended the restrictions on debt recovery with commercial rents until next March, and therefore some of our debt recovery action is somewhat stifled. However, I'm pleased to report that we've actually entered into a number of payment plans with our commercial rents, and organising for those any arrears to be repaid. And what will happen is if there are any resulting bad debts or write-offs that need to happen, they form part of the annual report that goes to the leader at the end of each financial year. So the position has improved actually from the previous position. And as I say, we now have a number of plans in place to recover some of those arrears.
Yeah, thank you, Sue. That's just for noting. Thank you for that. So move on to item 10, which is we now move over from finance into audit. So the internal audit progress report, over to Richard Bevan.
Thank you, Chair. So this is my regular report on the work undertaken by the internal audit team. And this covers the period from April through to June 21, and also includes the current position concerning audit recommendations. This report represents the last bit of work, the completion of the 2021 annual audit plan. So the audits that we completed, I've shown in my report on paragraph 4.1, where you will see the reviews that we completed. We gave 5 with a full assurance, 6 with substantial, and 1 reasonable assurance. Explanation of those categories are shown paragraph 3.1 of my report for the new members. We also, and the summary reports, we also include, I attach to the report, they're shown in appendices 2 through to appendix 13. Concerning the recommendations, report on paragraph 4.2 of my report shows the latest position where we have outstanding audit recommendations, where the actions that were agreed with the clients at the time of the audit haven't yet been completed. And they are detailed initially on appendix 1 of my report, but there was a supplementary paper we sent out where we had some late additions to the report. I normally leave it at that. I feel the summary reports speak for themselves, and just request that the report is noted, but happy to take any questions that, of course, the committee may have.
Any Councillor McCormick?
Thank you, Chair. Just briefly looking at the project management summary report, which is listed in Appendix 4, and for the ease of reference for the committee members, page 75, there were 4 significant recommendations on that. I'm trying to square what that actually means in terms of some of the big projects that we've got going on, because we've got some very big things going on with Many Down, for instance, and Basing View, with millions of pounds riding on both of those. Is there anything that we should be following up on as a committee as a result of the findings with the project management? The impression I get is that project management is a difficult task at the best of times. We've got some exceptionally large projects and a number of things that require our attention coming together all at once. Is there anything that we should be flagging up at this point as an audit committee? Are these any canaries in the mine for what lies ahead?
I think just to answer the question, the work that we've done this particular audit, we looked at the governance arrangements, the governance processes around project management generally. So that involves whether there is a project in place, as a project plan, a project board, and the appropriate reporting mechanisms that are in place. The actual issue of the performance of the project, if you like, and you refer to the big projects, the likes of Many Down, the Leisure Park, Basing View, and all that, they would be subject to separate audits, separate reviews. So this particular report is where we've given substantial assurance, because it's the first time you see that from the report, first time we've undertaken a project management audit. It is just focusing on the actual governance arrangements, which, as it stands, from what our findings have shown, substantial assurance means that we have the processes in place. Whether or not those projects that are managed in that way succeed or fail, obviously, is a matter for future process.
Yeah, if I could make a comment on that, because in previous meetings we've gone into quite lengthy discussions on the issue of the major projects. If you just as a reference, if after the meeting, if you read page 8 of the pack, which is the minutes of the previous meeting, the bottom paragraph has a very good paragraph explaining what this committee does in relation to big major projects. Basically, as an audit and accounts committee, we're concerned with governance, risk, and fraud. If you look at page 99 in this report to 101, it's very good on what internal audit has done in ensuring the governance of the big projects. If we as a council think that we need to dig down into the actual projects, then that, in Many Down's case, that's an issue for the Many Down Overview Committee. In terms of Basing View and the Leisure Centre, that comes under scrutiny and its performance panel. So it sounds a bit complicated, but our role is to make sure that we're happy that the governance and the risk and the fraud aspects of audit processes and procedures are in place. And as I say, in 99 to 101, that there's been some very good work there. But it's not within our constitutional position to then go down in and look at what's inside a project. Yeah. Any other comments on the internal audit progress report? Well, thanks very much, Richard. Thank you. So we then go on to item 11, which is the internal audit annual report for the last year, which over to Paul Gundry.
Thank you, Chair. Welcome, members to the committee. This is my annual report where I'm bound to give a personal opinion on the council's effectiveness of the risk management, control and governance processes that we have here at the council. This is primarily based on the work that's carried out by the internal audit team. And so for assistance for the committee, if you look at Appendix 1, which is page 153, that will give you a summary of all the work that's been carried out by internal audit over the last year. and you'll see there's an assurance level for each of those audit reports that have been conducted. And also for reference, it gives you the date that report was presented to the audit committee if you wish to look back at those reports after the meeting. My personal opinion can be found in paragraph 5.4, which is on 150, where I'm given a substantial assurance on those three areas. I wasn't going to say any more than that, other than just to ask the committee to note my opinion for the year. Thank you, Chair.
Thank you, Paul. We're asked to note the report. Has anybody got any comments? It seems very good, Paul.
Thank you.
Okay, great. Then on to item 12, still with Paul, fraud update protecting the public purse.
Thank you, Chair. Again, this is a regular report for committee that will come to you twice a year. And in question to one of the answer to one of the questions on one of the previous papers about reports on fraud, this is an example of such a report. So this will give the committee a breakdown on the work that's been carried out in terms of protecting the public purse in the previous year. I think the report speaks for itself. So all I was going to do is ask the committee to note the report, please, Chair.
Yep. Are we happy to note the report? It seems extremely comprehensive. Okay, thank you, Paul. That's duly noted.
Okay, thank you, Chair.
So on to item 13, viewing of social networking sites. This is our ripper. The regulation of investigatory powers is government legislation that controls how the public sector, us, is allowed to look at things like social media. And to put it in perspective, as a council, we're only allowed to do this if what we're looking at, the fraud that we're looking at, would carry a 6-month jail sentence. So it's, as it were, quite serious stuff. So do we have any officer that wants to make any comment on this?
So, Chair, obviously there isn't anyone representing the paper this evening, but obviously it is just to note, and we do have the service that have used it the most over the period in question is Internal Audit, who are obviously represented here this evening if the committee has any specific questions. But as you would expect, most of the investigations that have been held up are related to business grants paid out for COVID purposes, where there is quite a stringent fraud and assurance checks that have to be undertaken. But I'm sure that if you have any questions, Internal Audit will be able to answer how they've used them.
Well, yeah, it seems straightforward and in line with previous reports in earlier quarters. So are we okay to duly note that report? Yeah. Which takes us on to item 14, which is the work programme. So the next meeting, which is the 26th of July, hopefully all this will come into place, which is the annual governance statement, code of corporate governance, the audit results report, and the Treasury Management Q1 report. We have statement of accounts, summary of investment income Q1, and the full RIPA policy review. I think that's an annual requirement that we do. So that's our work programme for the next meeting. Has anyone got any comments about that? It's fairly straightforward, normal procedure. Okay, great. So, item 15, I don't think we need any of that. 16 confidential stroke exempt items for information. Well, we've done that particular one earlier. So in that case, we come to the end of the meeting at just on 8 o'clock. So thank you all for attending. I hope at some point we'll actually be able to have a physical meeting where we can all see each other. Councillor Miller.
Thank you, Chair. As we have new councillors on this committee, and just a reminder, we have addressed some pages of a certain colour, and they've been sent to our private homes. Some advice would be very useful on how we handle these particular pages from this point onwards. Normally, if we have these in the council, there is a confidential destruction box we can put them in. But I think advice to the new councillors might be very useful at this point.
Yeah, Sue?
Yes, if I could ask the councillors to hold them securely at home unless they're passing by the main offices where they can obviously enter and dispose of them in the confidential waste. We're obviously intending to have the next meeting in person, so you can bring them in at that point and put them into the confidential waste. Obviously, whilst you have them at home, it's the same as all of our information governance that you have, regardless of whether they're on pink papers or not. All the information that you have from the council is confidential. And therefore you should dispose of it appropriately in the confidential waste bins that we do have in the main offices.
Okay, thank you for that, Sue. Yes, Sajish.
Is it just pink paper or the whole bunch of the papers? Is it just the pink?
No, so if you wish to dispose of the papers, I would suggest that you bring the whole papers in and put them into the confidential waste bin.
Okay, thank you.
Okay, in which case I thank you all and declare the meeting closed.